Welcome everybody to the Real Dealz podcast, one of the top-ranked real estate investing podcasts for the last 7 years. This is the place to be for investing strategies you can actually use, expert interviews, and of course, some good old-fashioned entertainment. Now, here's your host for the show, Elliot, the REI guy, Smith.
What's going on, Real Dealz podcast listeners? I am coming at you with show 379. So, as the title suggests, we're talking about a lot of things, and we got Tucker back in the studio this week. One of my favorite things when I got started in this business in 2015 was listening to Tucker's show every week and listening to him talk. He didn't do a ton of interviews. He just got on the mic and talked about things that were going on with him and gave his views on the world and the real estate market. I think Tucker, after taking over this show, working with Tucker in the call center, we appointed him the CEO, Cole and I did. It's really so cool to see that happen and see some of the thought processes that he makes and decisions he makes and why he thinks a certain way. There's a few guys that I really, really look up to in this industry, not only as just really good people, but they're just a step above in just the way they handle themselves and the way they build their business and the way they treat people. And, probably would say that growing up in this industry, Tucker is one of my heroes in a lot of ways. So this was a really fun, enjoyable show for me because I got to ask a few questions of things that I really like to hear his opinion on. One of them was talking about the market. What does he see going on in the market in Portland right now? He's looking at moving to Naples, Florida. He talks about that and why he's looking at moving. We talk about indicators, this summer slowdown. Is it normal? What's going on in the Portland metro area? What's going on in the high end market? What are we doing to hedge ourselves? And we also really dive in deep into hedge funds. That's been a big topic of late, is hedge funds buying a bunch of properties in 20, 30 cities in this country, and they're buying up middle class America housing to have it as a rental portfolio. And so it makes us feel really good in the single family space if you're in those markets, if they're pumping as much capital behind it as they are, because they hire people that are way smarter than we are. And so that was a really, really good discussion. We talked for about 45 minutes. We talk about him going to Naples. We talk about the market. We talk about his opinions. We talk about the Hedgies. And I think you're going to get a lot out of this. I did. I actually went back and re-listened to it. And I don't do that very often, just to, hear what he said again one more time. So I think this is going to be a good show for you to listen to. So one really cool thing that I want to talk about for us this week, we talk a lot about partnerships, mentors, and working with good people. And so usually I'm talking about how to find a mentor and how to add value to that mentor and talk about some of the partners and mentors that I've had over the years. But today I just want to talk about partnership. So last year we bought a 24 unit in Kennewick, Washington with some partners from the Seattle area. They had a wholesaler from Seattle had tied up this property in Kennewick. They were over here in Seattle. They asked us to go drive it. And I'm like, hey, good property. I'd like to buy it with you guys. And so they're like, okay, well, you can bring some cash in, but then you guys can also be the boots in the ground and do property management. So we're like, okay, that sounds fair. So we'll run the property management for the first year, kind of just, we won't make any money. That'll be our add to the complex and the partnership. And then after that, we'll kind of figure it out. And so this property is the one I talked about a couple weeks ago on the apartments episode. So Chrissy got into it. The first meeting we had last year, she had been about 2 weeks into this project, and I had helped a little bit on some things. I went and helped collect rent one time, but really Chrissy's the one that does the rentals. And so we sat down with a group on a group Zoom, and we were going over all the things we'd done in the first couple of weeks and what our kind of thoughts are after we got a feel for the property. And me being the talker and always wanting to be the guy and my ego, we're sitting there and I start talking more than Chrissy does when she had done 95% of this work. And so I started talking and she got pretty upset with me, justifiably so. And so we're driving to Seattle that day and she tells me, she says, Elliot, That's not fair that you did that because I'm the one that did this work. I know you're the one that goes and speaks and is on stage and everybody thinks you're the guy, but I want something that I can plant my flag in, something that I can say, look back and say, I did this. So at that point in time, I said, okay, you're totally right. I shouldn't have done that. How about you take over all of the rentals and you manage all the rentals and I have nothing to do with them. Once we buy them, I have nothing to do with them. She says, fine, let's do that. Also, she's the asset manager. She's the one that gets to make the decisions, the final decisions on things that we buy. And Chrissy's really coming into her own in the last, 18, 24 months in a lot of ways, becoming a really good leader. She's more level-headed. She's a lot like Tucker in the sense where she's can take emotion out of it, very level-headed. I'm very emotional driven. So I'm either, the sky is falling or we're the king of the world and let's push and do all these things. And I'm a squirrel. And she's more tactful and strategic. So she's a better CEO in that sense. So I stepped away and I did nothing for this apartment. Nothing. And when I say nothing, I mean I literally did nothing. I helped one time get a tenant out, paid off a drug dealer. So that's about what I did. So we've owned this thing for a year and our partners called me a couple months ago and said, hey, we want to surprise Chrissy with something really nice. She wasn't expecting any money or expecting anything from them, but they're good quality people and really good partners. And so we set up a time. We went to dinner last night at a super nice steakhouse down in Bellevue. And I had teed Chrissy up. I knew what they were doing the whole time, but I'm like, hey, they're going to want to know the numbers. They want to know everything you've done. So you got to be on point on this meeting. You need to show what you've done the last year, stressing her out because I'm a dick like that. So we get there, we're all chatting and you could tell she was nervous and, we're talking and I'm like, okay, let's do this thing with Chrissy. And so she gets up there, she's talking and they're kind of grilling her a little bit, playing into it. And then she has fucking killed it. In so many ways. We've increased our NOI from 14,000 to 17,500. She thinks in the next 3 months we'll be at 20,500 NOI. This thing's going to cash flow like 10 grand a month. Once we get this going, she's turned over 13 units in COVID. She's jumped rents up from an average of $600 to now we're getting average $850 to $875 on these little loft apartments. More than anything, she's fought with Section 8 and got more money out of Section 8. She's got all these things and we got really quality tenants moving in. We still have some tenants that maybe we want to turn over, but whatever. That was all during the pandemic. She's already got rent notices out because we can increase rent. July 1st, we can send notices out. Those things were ready to go in June. She sent them all out. She posted them all. She's going to be a couple months. We're going to be refining this thing out and it's going to just be an awesome property. And so she's killed it, done an awesome job all on her own. And so these partners said, hey, we want to show you how much we appreciate you. And they slide her something, and I don't want to talk about it on the microphone, but it was extremely generous for what they slid her. Very, very generous. And they said, you have done such a good job without expecting anything in return. And for our partnership, we want to show how much we appreciate you. And this is for you, not for Elliot. Go do something really enjoyable. And so I sat there and I saw the pride on her face and it was so amazing because I know that I have been in her way in a lot of things during our career. I've been the guy that's been shining the light on myself. I go up and speak, I do the podcast, I do all these things because I'm the extrovert, I'm the people person. And so I finally got out of her way in a lot of things and stopped being her boss. I started being a partner last year in in our business. Not only does she take care of our 2.5-year-old, she does 80% of that. She's always planning everything. She plans our trips. She helps me with my trips. She helps me with my other endeavors and all my craziness. But she's also working full time and we're hiring employees. She's managing employees. We have 66 doors now that she's managing and managing our finances and these things. And to see the pride on her face, and if you knew Chrissy, knowing how she grew up, it was not good. But to see the pride on her face that people really cared and noticed that she did a really, really good job was something super special. And so if you're in this business with your spouse and you're the dominant personality, I would implore you to help empower them in certain ways and let them come into their own. So it just was a wonderful thing to see. The second piece of that is we've partnered with a decent amount of people on things. We have never had a bad partner. To have partners that take money or things out of their own pocket that they didn't have to do in any way. The agreement wasn't that we were getting anything. For them to do that and take us out to this nice dinner and recognize that is what true partnerships really are. Partnerships are you're looking out for the other person more than you're looking out for yourself. And you're looking at not just this deal, but you're looking at the next 10 deals. Because when they did this, the immediate thought in my mind is, because we're really good at finding deals and we're always bringing people in for deals. The first thought in my mind is, I want to do more deals with these guys and girls. I want to do more things. I want to add more value. I want to be around these people that really love people and are just really good human beings. Because the amount of fun we had just shooting the shit all last night, and the conversations and their generosity and planning trips, that's what this is all about. Once you get into this level of this business and you start building these really quality relationships with people that are pushing at a really high level, the relationships and the impact that can be made is exponential. And, I see it with Tucker and Cole. I see it with our partners on this building. I see it with my partner on the 25 unit that we just bought. I see it with my business partner that's, 55 years old in Vancouver that we've done over 100 deals together. My first mentor. The cool thing is, win or lose, you are in this together. I have guys, I could lose, we could screw something up, or the building could go south. And I know that these partners would be right there in the boat, dumping water out with me if we're taking on water. And those are the type of people you want to surround yourself. Spend a lot of time finding those people, and you will go miles farther in this business. So guys, I think you're really going to like this show. Really listen to what Tucker has to say. I think he, again, is one of the sharpest guys in this industry. I think he knows this industry better than most. He knows how to market better than most. He understands the numbers. He is a student of the game. And so I think you're really going to want to listen to this one all the way to the end. It gets better and better as we go. So listen to our sponsor real quick, and then let's jump into the show.
All right, Real Dealz podcast listeners, I want to talk quickly about our show's sponsor, Iron Bridge Lending. If you guys have not reached out to Iron Bridge already to talk to them about funding some of your upcoming flip projects, I highly encourage you to do so. I've known the owner of Iron Bridge for a very long time. I personally borrowed millions of dollars from them over the years to do a number of different projects, and I can say without a doubt, they are the best hard money lending company I have ever come across, and that is the reason why they are the sole sponsor of this show. I've had a lot of other companies reach out to me and want to sponsor this show, but I just won't do it. I feel like I need to be genuine in who we have sponsoring the show, and it needs to be somebody that I've personally done a ton of business with. So I personally vouch for their ability to be the best, hands down, in the world of hard money lending. You won't find better programs, you won't find better terms, and they're lending or will be lending in over 20 states. So chances are, if you're hearing this in whatever state you're in, it's definitely worth it to check out their website, reach out to them, see if they're lending in your state, and if they are, I would absolutely encourage you to do business with them. Another very cool thing to note is that they have a program for most rehabs where you can actually borrow up to 90% of the purchase price. Now, this is given the fact that you are actually buying a deal, which if you're listening to the show, that means you probably are. But if you have an actual deal on the table, they'll fund up to 90% of your purchase price, and they'll even give you rehab funds on top of that, which means that it only takes 10% down to get into a project, which is unbelievable in the hard money world. So do yourself a favor, reach out to Iron Bridge Lending, have a conversation with them, see if they're a good fit for you and for your next project. I can guarantee you that you'll be happy that you did.
What's going on, Real Dealz podcast listeners? Back here with Tucker this week. Really going to get after it. We were thinking to ourselves, man, there's a lot of new things going on in the world right now. There's a lot of noise out there. And one of my favorite things ever, growing up in this business was listening to Tucker every week and getting your opinions on stuff. So we got about 3 or 4 topics we're going to kind of go over. Not going to be a super long episode, but Tucker, what's going on?
It's summertime in Oregon, which is the only time you really want to live in Oregon. So that's awesome. It's about 86 degrees today. And we got a lot going on, actually, which we can dive into here shortly. But yeah, busy summer on all fronts. Call center, real estate business, life, just a lot going on.
Yeah. Why don't you give people a little bit of update on maybe some life things that are going on with you.
Life things. All right. So as everybody knows, I kind of stepped away from the microphone for a while to kind of figure out what the next phase of life is going to be for me to some extent, and to kind of focus in on the real estate business and the call center. And so I'm actually leaving next week, going on a little trip, second trip actually, down to Florida. And I'm going to go check out Naples for a second time. I've been going back and forth on where it is that we're going to move. I really like Scottsdale, but Naples is really cool as well. Both have a lot of opportunity in the niche of real estate that we focus the most in, which is high-end new construction. You know, obviously Florida is the other side of the world, it seems like, in a lot of ways. I mean, it's the other side of the country, but it's a long way. You know, family is a consideration. There's a lot of people that are looking to jump ship out of the Portland area and more specifically out of Oregon in general, just to be honest. There's a lot of political BS, you know, whether you're, you know, lean left, lean right, doesn't really matter. We just have poor leadership is what it comes down to. We have a terrible homeless problem, which then creates, you know, riffraff and crime problem. I think we were up on shootings this year. We're up over 300% from last year. So we just have a lot of issues here. But the biggest issue that I see is the taxes here in Oregon are just ridiculously high, and more specifically in Multnomah County. You know, I think the average, you know, if you're a high income earner and you live in Multnomah County, after all taxes are accounted for, I think you're taxed at like 58% of your income.
When did they increase that? Because I know you're 9% state income tax, right?
So they have these sneaky little additional taxes for high income earners in Multnomah County. There's a few other additional taxes that they ding you with, and some of them are Tri-County, some of them are just Multnomah County. So that adds on to both state and federal income tax, goes on top of those, right? So it's really ridiculous. And the problem that I see with this is that right now we're in July, beautiful time to be in Oregon, but October through May is often just dog shit. It rains, It's cold, it's dreary. And so, you know, California, they joke about it being high taxes, but it's the sunshine tax, right? People pay it because it's beautiful weather. Well, you can't get overachieving, you know, job-making people to stay in an area and continue to create for that area if you're taxing them at that high of a level and also having them live in the rain. Something's got to give, right? Or live in the rain 8 months out of the year. And so ultimately, my prediction for Portland, it's a sad prediction. And I don't say this like I'm hoping I'm right, because I grew up here. I'm an Oregonian. I've spent 36 of my 41 years in Portland. I wish that I could stay here without any reservations for the rest of my life, but things have changed dramatically. And ultimately, I think the path that Portland is on is just a giant path to mediocrity. And really what that means is that, you know, anybody that is a big mover and a shaker and is willing to start, you know, a business and build a business and have it here and have it become a big business, if they haven't started yet and they don't have major roots that don't allow them to move, they may consider moving. And so then where does that leave Portland? Well, it leaves Portland in a situation where you have just a lot of mediocre people here, which means it will never become a great city again. And that's my worry. And I think that's the writing that's on the wall, to be totally
honest. Which is terrible,
because
when we lived in Vancouver, Portland was awesome. We came over for date nights all the time. You go down, walk down 23rd, the Pearl District. You go over to Mississippi. You go to Alberta. You hit all these streets. I mean, there was so many, you know, Lake Oswego is awesome. I mean, you could do so much fun stuff. Every time I've driven through there now, I just keep on driving.
Yeah, it's too bad because it's like, I mean, every time I go to the airport, it's like almost like a third world country when you drive through the freeway that goes through downtown, which is I-84. And it's a big problem, and it's got a lot of problems, and we don't have the leadership that can solve it. And I think it's going to take a long time to solve it. So the question that then I have to ask myself, and my family has been asking itself, is, you know, do we want to hang around for the next 10 years to see if Portland figures it out, you know, at least on a policy level to clean up the city? And the answer to that's no. But the other question is, you know, once you start taxing people, do they ever take the taxes back? And the answer to that is generally no. So, you know, I think we're past the point of ridiculous on taxes here. And I think we're past the point of being able to fix it in any sort of a quick manner. So long and short of it is that I've been looking for a place to go, you know, whether or not that means it's going to be Scottsdale, or whether or not that means it's going to be, Naples, Florida. I don't know yet, but I'm going to go to Naples again next week and we're going to see what we like. But
we liked that. I told you, and that's the funny thing, because we went in February, March. And I told you when we got to Naples, I'm like, Tucker, you might want to strongly consider, because I knew you were talking about moving to Scottsdale. Like, you were sold on Scottsdale. It's Scottsdale, right? I'm like, you might want to look at Naples. You started doing some market research, looking at it. And I'm like, and then the beaches there are the best beaches I've ever been to in my life. That sand is so freaking nice.
It's like, what is it? Powdered sugar. It's
like, I hate the beach, the sand, because it gets everywhere. This stuff, you little brush and it's gone. It's like, and it wasn't hot either. Like, it was a hot day when we were there. And normally the sand up on the, Oregon coast, you touch it, your feet burn. It was hot. My feet felt wonderful.
Yeah, it's a beautiful place, but it's a long way to go. And moving it's an interesting thing, because I know you guys have probably thought about it. We've got mutual friends, Greg Lynch, he's thought about it. A lot of people think about it. What I've discovered in this process is that, you think about it initially and you're like, yeah, that sounds like a great idea, right? I'm on board. Let's do it, right? And then it comes to the nuts and bolts of actually doing the things necessary to make the big move. And then that's the part that scares the shit out of a lot of people. And they go, I don't know if we're going to do it, right? And so I'm kind of in that phase right now, but I'm figuring it out. And so part of figuring it out, we accepted an offer on my own home that I thought would be our forever home again, but I've come to realize there's no such thing as a forever home when you build houses. So we had an offer that was pretty ridiculous. It was way more than I ever thought that we would sell this house for, even, 5-10 years from now. And so I said, well, what the hell, we'll take that offer. So that closes here in about 2 weeks. And so from there, we're moving into another project that we're renovating right now. So we're playing a cool little game of, making as much tax-free money as we can, and then taking this next project that has a huge margin on it as well. I'm going to put it under the personal umbrella and take all that profit tax-free eventually also, which is great. But we're basically going to downsize. We're going to move into a kind of a cool little ranch house here also in Lake Oswego. And then we'll finish out 2021 here doing business kind of as usual. And then we'll figure out, at the beginning of 2022, what our plan is exactly. I couldn't tell you right now, but we're walking up to the edge. We're looking over and we're figuring out which way we're going to jump.
Here's the problem I see, though. I said no to Florida because I'm like, we know nobody and it's on the other side of the world. If you move to Florida, I'm dicked, because then Chrissy's the one that really wants to move to Florida. So I'm probably moving to Florida too.
Yeah. It's, I know a few people down there, but not nearly as much as Scottsdale. I know a lot of people in Scottsdale in the real estate industry and outside of it. So Scottsdale is just a very familiar place. I've been there countless times also. But yeah, it's a little scary. And I get your point. Like, moving someplace where you basically don't know anybody, it's a big jump, right? But it's an amazing place weather-wise. There's a ton of opportunity there for what we do, which is build high-end new construction. And the same houses we build here and sell for $3 million would probably sell for $9 million. And so it's the same product, it's just a different place. And the margins, as you would imagine, grow significantly with price as well. So there's a lot of opportunity there, but we're going to kind of find our way to whatever that is. But that's kind of what's going on, as we kind of split time here and decide what we want to do. But on top of that, it's been a great month here. We closed out the biggest sale of my career last week, fortunately. And, the sale of my primary residence here in a couple of weeks, will well exceed the threshold of tax-free money that you can get after living in it for 2 years as a married couple. So as far as money making goes, this has been an amazing year, but there's a lot of other things attached and other challenges and things that are going on as well.
Nice. Now, speaking of the one you just sold, that was the view lot that has been talked about many times on this show, I'm sure. That was the one by the train tracks, right? That you had water drainage issues, that you've owned the lot for 6 years. And I think you've done videos there. You've done.
Yeah, I wrote a book on it, maybe 3 books. Yeah.
Yeah. So congratulations for finally getting that one done and making probably decent money on that, but as well earned money.
Yeah. If you did the hourly on it, it's probably not nearly as impressive, but looking at the lump sum of what it paid, yeah, it was our best profit to date. But it was also, I probably gave up a couple years of my life in frustration to get that there as well. So it's a give and take. And as I told you, after that closed out, we have another one that we're building right now that I'm hoping that we can basically mimic the same profitability, but do it in a 9-month timeline instead of a 6-year timeline. So
nice. Now I just got to get you to put some of that money in some big multifamily.
Yeah. We're getting there. But I definitely want to move that direction. Taxes are a big thing when you start making, any sort of decent money, really. It's funny. Taxes are like that thing that people on social media, especially, like, if you don't make shit for money, you're like, pay your fair share. And then as soon as you start making just decent money, you're like, this sucks. This is really not fun. But you have to get to that point before you really understand it. Otherwise, you just have kind of an ignorant opinion. So
yeah, I'm with you. So Chrissy said I can't talk politics, so I can't weigh in on any of this anymore. Oh man. So let's jump into, you posted today in the DFA some market thinking, looking in your crystal ball here. And, nobody knows exactly what's going on, but you're really good at always keeping a pulse on the market and having an idea of kind of where things are going. And so I'd like to hear your opinion of what you're thinking, and then, dive in and see if we think it's a normal summer slowdown or if it's something that's trending a little bit differently.
Yeah. And I will say, I've been a little quick to jump to chicken littling the market a little bit over the last few years.
But no, come on.
But for good reason, I think, and eventually, I think even Peter Schiff is right eventually, right? So, but I'm trying to be a realist in terms of like where we're at with the market. Part of the reason why I sold my house is because, a year ago, I thought best case a year ago, it was $2.8 million. And now here we are a year later and I'm selling it for 3.5. So like, things have gone up a lot. Like that's a fairly unhealthy increase if you look at it just from like an asset price perspective and an overall market perspective. And so that worries me a little bit.
And I've seen that here in Tri-Cities. There was a house that Christy and I really wanted to buy a year ago. We weren't in a position to do it. It was $1 million. I think I sold for $1,075,000. That in Tri-Cities, that's a badass house. It's got a really nice pool. It's like on 1.5 acres, 4,000 square feet with a guest house. I mean, this thing was dialed. I guess somehow the people that they moved to be closer to grandkids and the kids left. So 1 year later, they relisted it for 1.375, pending over ask for like 1.415 in 1 year in Tri-Cities. Tri-Cities 2 years ago didn't have a million plus market. Like there wasn't spec builders building. I mean, mainly customs here and there. And now this house resold for $300,000 more almost in a year. Right. So this seems to me like, now it was a dialed house. It's probably one of the best houses in Tri-Cities, but I just don't, Christy and I looked really hard about buying it, but man, it just seems frothy.
It is. And, I don't want to throw myself under the bus, but with the house that we just sold, it was a fantastic profit. We probably left $300,000 or $400,000 on the table by selling it early. And when we accepted the price and the offer on that house, I sold it above what market was within a 6-month window. We're talking a 6-month window. I sold it probably $150,000 above what it was worth top end at that point. And the market's changed so much in 6 months that now I sold it short probably $300,000 or $400,000. So that's like, it's a radical change. We've never seen anything like this in terms of how quickly values have changed. We have seen values go up in a fairly, sizable amount of, value over a little bit longer period of time in the last run up. But the last year has been the most radical change in a 1-year period that I've ever seen. And so I guess the reason why I'm saying that is because we're robbing some of tomorrow's gains today. Whether or not we rob too much or not, I don't know. But we have robbed some of tomorrow's gains. We just cannot sustain what has gone on. And so part of the post that you alluded to today is that, I've been watching every house that goes on the market. And I used to watch all of Portland, but now I've really niched it down and I just watch Lake Oswego literally on a daily basis. I watch every property that goes on the market. I see when it goes pending. I see what reduced. Like I want to know everything. And, Chris in the office here has some listings in Lake Oswego here that we passed on that we didn't buy that I kind of pushed down, hey, maybe it'd be better for you to list it. And he's been able to list them. And one of those houses that he listed was a property that it's like rental grade, it's dated, it's a little bit funky floor plan wise, doesn't have a great backyard or really much of a yard, but that house would have sold in a second 3 months ago for what he put it on the market for. And here we are 3 months later, and that house we're almost 4 weeks on the market, one price reduction later, and it's crickets, right? And so that's not the entire market. That doesn't represent the entire market at all, but it does represent a segment of the market. And what I've noticed is that house, although not that exact same house, but that exact same type of product, I've seen that story happen over and over and over again by looking at the data every day in terms of other listings that are out on the market. And so basically what that says to me is that the market there's a crack in the market, right? And that crack, whether or not it keeps cracking and it spreads to other segments and, product types within the market, I don't know yet, but there is a crack in the market. It was bulletproof before now, right? Last 6 months, it's been completely bulletproof. Didn't matter what you put on, didn't matter what type of product it was, didn't matter if it was on a busy road, didn't matter if it had a shitty layout, didn't matter any of that. Didn't matter, right? Well, now these things are starting to matter. And if these things start to matter now with 0.8 months of inventory on the market, we're getting a little buyer fatigue with 0.8 months of inventory on the market, super low interest rates. What happens when inventory jumps to 2 months, maybe 2.5 months? And what happens if interest rates bump up a little bit at the end of the year or the beginning of 2022? So I'm looking ahead like, okay, we've baked into the value of the asset half a month's worth of inventory, ridiculously low interest rates, and no buyer fatigue. So if all those things start hitting, what happens, right? And so obviously the market would slow. But right now I feel like it's slowing in one segment of the market, but I don't know how contagious that's going to be. And so I'm kind of asking the question, that's why I put it out there. I said, what are people seeing in other markets? And it was pretty unanimous that most other markets are seeing that as well. And that's one of the advantages of the DFA as a sounding board, to kind of get that from other places, because real estate is local, but a lot of these other markets have been seeing the same phenomenon that we've been seeing here.
Yeah. The cool thing about Redfin, if you're in a market with Redfin, is you can go to the data center as well, and you can really see some graphs. And so you take 2020 out as an outlier, right? And you start looking at some of these, Portland as a whole, for the other years, and you can see how they trend. Pending sales are still trending up a little bit, but like it should start tailing off here right now, but they're actually decreasing from where they're at year over year, percentage wise, like a pretty big curve. So like it was up in, March was up 53% pending year over year. Obviously that's, when COVID hit or whatever, but now it's starting to go down quite a bit. Now it's only 34% year over year. New listings are starting to trend down just a touch year over year. It's still, going up in where it was, but you can see there's some cracks in the armor in areas. But does it matter, Tucker? Because we're at such limited inventory across the board, right? Most major metros are sub 1 month inventory. 2-3 months of inventory, it's still a seller's market. So even if it was to triple, to 3 months inventory, 2 to 3, that's where it's been bouncing around the last 3 or 4 years. And it was still seeing pretty good appreciation year over year. Does it matter?
I think it does to some extent. And the reason being is because it's all relative, right? So like right now, if you look back at 2005, when I was in the mortgage game, I still remember the sales meeting when we hit 5.5% on interest rates. And it was like money was raining from the heavens above. All the mortgage guys were like, we're going to go sell loans. We're going to make so much money. This is going to be awesome. Well, that was relative to the fact that we thought 6.5%, 7.5% interest rates were high, 5.5% was low. Well, now, that perspective has changed. And I think to some extent that perspective has changed with inventory as well. Even though historically 2 to 3 months of inventory is very much a seller's market, I think it would make it a radically different market than it is right now with 0.8 months of inventory or half a month of inventory. And so, yeah, I think you're right. But perspective, is a funny thing. And on top of that, buyer fatigue and buyer confidence, it runs rampant quickly, right? Yeah. So as soon as, something starts to happen in the market and people start to feel it, especially with the message boards and the realtors and all that, like one headline and it's like the market is softening and whatever. So I think that kind of accentuates any issues that may pop up. But, I don't know. At the end of the day, the turnkey product is still selling very well and it's selling for high prices. But the difference is that 3 months ago, 4 months ago, 5 months ago, the gap between turnkey pricing and let's call it wholesale product or dated product, it was a much smaller gap than it looks to be now at this moment in time. And so to me, that just says, okay, buyer fatigue is starting to set in. The market is growing a conscience. It's thinking a little bit more. It's not just blindly paying whatever for anything. So, I think it's the first step in the direction towards normalizing the market or a flattening of the market at a very least.
Yeah. I think affordability really has to play a point in this. Even with super low interest rates, I think, the buyer fatigue, affordability side, prices just can't keep rising that quickly because wages are nowhere close to that, right? And so you just can't continue to push these prices. I mean, even in Tri-Cities, which should be less. I mean, I think our median price last month was like 400 and some thousand.
Really?
Yeah. It's nuts.
Wow.
Like on the low force, but like that has never been a thing. I mean, we're seeing 12, 15, 18% year over year appreciation. I just can't. Now there's no inventory, but people just can't, they get tired of it. They just keep saying, okay, it's out of my price range and I'm just not going to deal with this. And anything that comes up in their price range, they're having to be beat out by 30 other offers. At what point do you say, screw it, I'll just rent?
Yeah, well, but rents have gone up substantially as well. So, I don't know. It's a strange time, for us, and really what's important to the listeners here is, how do you proceed right now, right? Like, how do you run your business moving forward? And so, for us, I'm just kind of employing if it's a great piece of property, we're buying it. If it's not a great piece of property, I'm not really that hot to trot on buying it for our model, right? I know other models, people do more volume, they do more things, but for us, it's got to be a great piece of property. And if it's a great piece of property, that's my hedge against whatever softening or flattening of the market, happens. I don't think, there's just too much tailwind to be, a major drop in market, but a drop isn't going to feel like a drop, right? Just a flattening of the market, the people having kind of common sense and not having, removing the appraisal clause and all those things, like that's going to feel like a radical change, right? Even though it's just normalizing. So we're going to have to go through this phase of like going back to normal and just understanding that it, what that feels like. Some people are going to be like, oh my God, the market's crashing. It's like, it's not crashing. It's just normalizing, right?
Yeah. So let's dive a little bit deeper in that. So you're different in a lot. You've grown up in, doing high-end specs, but a lot of the listeners are doing, a couple flips or doing flips or buying rentals or things like that. And they have a decent marketing machine. They're doing 1 or 2 deals a month, probably middle class pricing, middle of the road housing. What are you doing right now to protect your downside and to make sure that you're maximizing and still on track to have a really good year? Like what are you employing? And are you cutting costs on things? Are you being more strategic? What's your thought process there?
It really just comes down to the types of projects that we're taking on. We're not really, we run a pretty lean ship in terms of costs. We don't have to do a ton of marketing these days to generate sufficient lead flow for us to buy the amount of houses and properties that we want to buy, to do the number of transactions and deals that we want to do in a year. But I'm balancing the different types of transactions that we do, right? So we have our high-end new construction that is going to be a great lot, or we're not buying it, right? Anything that's like an okay lot or it's in an okay area, I'm passing right now. It's got to be a great lot in a great area. If it's a great lot in a great area, we're buying 2 at the end of the month here. So it's not like we're, slowing down by any means in terms of that. But I'm balancing that with renovating kind of quicker turn product. And that quicker turn product is simple ranch houses, right? So we're renovating 2 of them right now. One I'm going to move into. The other one, we just tore it all apart. But they're, anywhere between 1,500 and 2,200 square foot ranches, 3 2s to 4 2s, 4 2.5s. They're just very simple houses. You can get in and out of them quickly. The beauty of those too is that there's not a ton of them on market that have been fully updated, and they're all one level, and everybody loves one level homes. They just love them. So if you update them, you have the ability to really push price per square foot on those because there's just no objections to them, especially if you can get them with a master suite. That's like the key to really pushing price on ranch flips. And so we're doing ranch flips and we're doing high-end new construction. And that's kind of how I'm hedging risk, both in terms of projects, but also with the higher end projects that people would say, okay, those are the ones with more risk, because the ranches are cheaper homes for Lake Oswego, because that's the only place that we're doing them. So that in itself hedges risk. But with the other high-end houses, if it's not a great lot, we're not buying. That's really what it comes down to. And great lots and great houses sell no matter what the market conditions are. Maybe it fluctuates 5% one way or the other, but they sell no matter what, especially in Lake Oswego, especially because right now, and this is one of the other factors I didn't mention, which is really why it's driven my house price up and all the homes that we're selling and projects we're doing right now, is that with all the problems that are in Portland right now, Lake Oswego is like its own little bubble, right? And so people that are coming to Portland, moving here for whatever reason, family, job, choice, there are some crazy people that actually want to move here by choice, I guess. But, those people that are moving here, before they had a lot of choices in terms of neighborhoods and areas that they would move to if they have means, right? And when I say means, I mean money, right? They have choices and options. Now it's like Lake Oswego is the tip of the spear. Like if they are coming here from somewhere else, they look in Lake Oswego first. And if they can afford it, they buy here. If they can't, then they start looking at some of these other areas around Portland. But the reason being is because you don't have the riffraff here. You've got a little bit of the homeless issue that's starting to trickle in, but really not much. So it's kind of the bubble next to Portland that stayed clean, right? And that's really pushed up property values here a lot. So that in itself is a bit of a hedge also, because that's where we're doing all our projects.
What are you seeing? I'm hearing some rumblings. Obviously, lumber futures have come down. What are you seeing supply chain wise, lumber prices? I heard another OSB factory burned down and up in Canada, so that might cause some OSB issues. But what are you seeing on your end with the new builds and just costs going forward?
They're still expensive, for just so everybody can kind of quantify that. The latest new build that we're framed and we're doing rough trades on the inside right now, which means plumbing, electrical, HVAC. That house, we got into a big pissing match over a tree that we had to cut, which basically pushed us out 60 days on our start. And so that pushed us out 60 days on our lumber pack order for all the framing material and trusses. Well, that 60 days changed our pricing by $65,000. So we're spending $65,000 more in lumber on that house than we would have if we had ordered that lumber 60 days earlier. So that's a ridiculous increase, but we haven't seen much reprieve from those highs in terms of pricing yet. We keep asking, and the best answer we've got is sometime beginning of 2022, we might see some reprieve because it's kind of has to work through the system. But as of right now, the builder, the buyer, there isn't much. I know a lot of builders that are building off thinner margins over in kind of like Happy Valley area, which is just on the other side of Portland. And many of them have poured foundation and cut. They're not framing. So, it's an interesting time. But here's the other thing is, a lot of people are like, well, I'm going to hold off or whatever because lumber prices are so high. We're getting increases in every other product as well. I've had people, suppliers send me messages, literally weekly. That's anywhere between 15 and 23% increases in product costs, right? So, that's the other factor here that's at play, right? We have the market factors that we just talked about, but the underlying cost to build a home, it's going up, and it's not just lumber. Even if lumber comes down, everything else is going up, and those things don't come down. They're kind of like taxes, right? Once they go to a certain point, they never give back, really. So, it's getting progressively more expensive to build everything, and that's just kind of the way it is.
Yeah, I mean, I'm looking at Home Depot right now, a 2x4, 96 inches, still $642.
Yeah,
2x4.
Yeah, so
you need a lot of 2x4s to build high-end specs.
I tell you what, I was looking at my par lumber breakdown bill. I had a $133,000 lumber bill this past week, and I was looking at it. I was like, "Holy shit!" And because then you start going through it, you're like, "Well, I didn't need all this decking. The damn architect could have cut this out. Framers could have cut that out. All these. It adds up, man. It's insanely expensive."
I did talk to a guy that was building this last weekend up at Coeur d'Alene. He's building 300 units up at WSU. He said, because he's up in Spokane, he said the lumber yards are flush, they're stacked. And he said his prices were coming down on some of it, not OSB, but some of it was starting to come down. But I drove by those mills up there that's already produced the 2x4s, and they're stacked, they're loaded. And so maybe there's going to be a reprieve at some point.
I hope so. You know, one of the things, I did a little bit of reconnaissance on this topic, and I know you did too, but I think, you know, it's kind of like the mills are kind of like the 5 families of lumber, and 4 of those 5 families are publicly traded companies, if you didn't figure that out, which tells you all you really need to know about this game. So,
yep. And it's like a cartel, but the people that are buying the lumber from, the bare wood cutting down, those people aren't making any more money. I watched a very interesting video from Wall Street Journal on that those guys are not making any more. It's just the lumber factories. They're just controlling.
If you look at the adjusted cost for raw timber from 1983 to now, it's actually less. Adjusted for inflation. So that's, you know, so yeah, I watched that same video of like who's actually making the money, right? And that's what that got me down the yellow brick road of who actually owns the mills. And it's like, oh, well, 4 out of the 5 biggest mill companies that own these mills are publicly traded companies, which really only care about stock price. If they only care about stock price, you know. So anyway, I digress.
So, okay. So let's pivot into another topic, because I think this really matters too with what we're talking about on market, you know, housing market, middle-class housing market. Let's just go in that segment right now. So not the, you know, high-end specs, just middle-class America. There's been a lot of news lately about hedge funds buying a ton of properties. And there's been articles from CNN, Fox, all these things. They're saying hedge funds are going and competing. You're very likely you're competing with a hedge fund and they can overpay and they're going to buy up all the middle-class America housing, even though they only own 1 or 2%, but they're getting more heavily. They are getting more heavy into this market. What's your thought process? And how does that insulate middle-class housing, I think, to a certain extent in the markets that they're possibly in? Because they're probably in about 25 to 30 markets, I'm guessing.
It's happening. We know it's happening. The saving grace for middle-class America right now is they don't know what the fuck they're doing yet, to some extent. But they will. They will figure it out eventually. And when they do, I don't have a complete crystal ball on this, but when they do, they will buy a lot more houses a lot quicker, which is going to do 2 things. It's going to eliminate the need for realtors on certain housing types. So realtors need to understand their time is limited. If they're selling bread and butter, median price point homes, they're about to be out of a job in the next 5 years. It's going to require a higher level of intellect, a higher level of, you know, network, and you're going to have to service a higher level individual in order to make it in that business. And you'll make a lot more money probably because there'll be less people that are serving those folks and selling those types of homes.
Or you're going to have to lower your margins and start working for like a fee-based business instead of like 6% commissions. You're not going to be, the model's not going to work, I don't think.
But I don't see most existing realtors doing that. I see them getting another career. I would see maybe new people getting into the business, not ever running their own business and working on a fee-based model with like a Redfin or some sort of a, you know, cheaper brokerage. I could see that happening. But those that are used to charging normal commissions and have been making it, you know, because they can charge larger commissions and they're selling those medium price point homes. If the Hedgies move into your market, it's only a matter of time before they're just more competitive. And, you know, I'll give you a couple examples right now. And I don't want to throw Chris under the bus by any means, because it's not his fault, but it's really just a symptom of the market. But there's 2 homes that Chris is listing right now. Chris being our office manager here, who's also my acquisitions person. And so these are 2 houses that I passed on that I said, you know what? I don't want to buy them for our model. But guess who would have bought them? Zillow. They had a Zillow offer for both of these houses. And the number that the Zillow offer came in at, and we could argue whether or not that sticks there or not, but we've heard stories on both sides. Sometimes it does, sometimes it doesn't. But their starting numbers were ridiculous. And those numbers were accounting for the fees that they'd charge, right, in the sale. And now Chris is trying to sell these houses, and they're well below the net of what they thought they were going to get from Zillow, which creates friction, right? That's my point. So now these sellers they have a listing contract, and they're trying to sell it on the open market, and they've got realtors in the middle that are getting paid commissions, and they're already netting less than what they thought they could get with Zillow. Well, let me tell you what, that only has to happen a few times before that spreads like wildfire through the market. And guess what? People are like, well, what the hell do I need realtors for if I want to sell my house directly to Zillow? And it's happening.
And I did a poll on this. Yeah, I have a decent amount of followers on Instagram. 500 votes we had. 508 votes. And the question was, do you think a majority of real estate agents will be needed by 2030? I'm talking simple single family deals. 67% said no out of 508 votes. And my page is filled with investors, agents, things like that. The other thought process that people don't understand, you think you're selling your house to Zillow. You think you're selling your house to Open Door, OfferPad, these guys, and that maybe they're keeping them or flipping them or whatever. They're not. They're actually just another marketing arm for the hedge funds. So yes, you might be competing with the hedge funds on open market listings, but you're also, when these guys come in and people are like, why are they paying ridiculous prices? Well, it's the same people that are paying ridiculous prices when they list them on the open market. They're just buying them, packaging up inventory, and transferring it right over to any of these hedge funds that are trying to create a portfolio, the Blackstones, the Amherst, all these, American Homes for Rent, guys like those. So people are like, how can they do this? How can they do this? They're going to lose money. They're not losing money. They're making their fees. They're passing it to a different entity, which is a hedge fund.
Yeah, and I've seen, and I'm sure you've seen it too, but one of the local Facebook groups here that, I run the local show in, I've seen realtors on there like, Zillow or Open Door gave my clients an offer. There's no way they'd pay them. That doesn't make any sense, and blah, blah, blah. And I had to chime in a couple times. It's like, it's not supposed to make sense. It won't make sense to you, but you need to embrace the fact that it's happening, right? And right now, I think most realtors are still in denial. I mean, the writing's on the wall for me in terms of that. I do believe, though, with that said, there will still be the higher end realtor that does really, really well, because that higher end clientele it's just a different animal. And, we sell to a lot of them. I just sold to a billionaire last week, and I see why number one, I see why the guy got paid that brought him to me, right? He handed him to me and said, trust this guy. He'll build you an amazing house. He said, sure, build it. No problem. Whatever. What do you want? Done. Right. So there's value there. There's a value exchange, but they want a guy. And so they're a little different, right? But if you've got that typical bread and butter house that's in, suburb of Phoenix, that's a 3-2, 1,800 square feet, easily comped. It was built in the 90s or the 80s or, even the 70s, like they'll buy them all day long. And you don't need representation to get an above market number for them right now.
Exactly. And that's the thing is realtors probably be doing a better service to their clients by saying, hey, just pay me 1%. I'll go solicit some offers from Open Door, OfferPad, these guys. I'll make sure I'm negotiating best on your behalf. Make sure you have some representation, but let's go do this. They'll probably pay more. But like you said, they're only buying 450, 475 and under. They have a cap on what they can buy because they need the yield on their return on their money, right? So agents need to move up, right? Then there will be fewer agents a lot of agents will get pushed up because they don't know how to move up and they don't know how to deal with those people. Most agents sell a couple houses a year to their friends and family. They don't know what they're doing. It will thin the herd for sure.
Yeah. And it's happening. And we know, minus some major economic collapse, the hedge funds are well capitalized and they have a ton of intent to continue buying as much as they possibly can and filling one fund after another with houses. And ultimately, we heard them say it. I mean, we were both on the call and they said they want to turn us into a renter nation. And if you want to participate in the upside of the value, buy their stock, right?
Yeah. Buy their stock. And don't think this is just US based people, because it's not. During COVID, the best time for renters to not pay their rent ever in the history, probably, they lost 3% of rents across their portfolios. There is money pouring in from everywhere to find yield right now because there's no yield in the world right now, really.
Yeah.
So they're trying to find
last time. The last run up. You know where all that money was dumping into? Mortgage-backed securities.
Yeah, which they got screwed.
They're like, fuck it. Why do I want the mortgage-backed security when I can own the real estate?
Yeah, own the asset. This last time I got screwed because I held the paper.
Right.
Now screw it. Now let's buy this. And so there is a strategy though, guys. We talked about this a little bit on the DFA Facebook group. So say you guys have tied up a property that fits and you're in a market that has a open door, just look for open door, offer pad or whatever. Go solicit offers for that property as like a wholesale deal. We've had a lot of guys sell to them, or they close on the property and then go get an offer from open door offer pad. And they're basically making their nut with doing no work. And so that's a really good strategy right now. If you're doing off-market marketing currently, and you're finding that middle-class housing, go do it. Then go type in an open door offer pad, type in the address, see what they'll pay,
Yeah. It's easy money in a lot of cases, maybe not for everything, but they're going to get more sophisticated. They're going to try and buy more. There's going to be more of them doing it. Certain ones are fixated on certain markets more than others, but it's going to continue growing, I think, minus some major economic collapse or major black swan event. You can't predict those things, but they're going hard too. So, I think that's going to change this business. It's going to change it for investors too, in terms of the game of marketing. Like, you're going to have to get better at marketing, because ultimately they're going to get better with time too. Right now, they're not very good, but they'll get better with time. They're relying on big brand marketing right now, mostly, which is, TV, radio, billboard, things like that, to drive awareness and get people to their site to fill out, information. But with time, they'll employ the right people to kind of help them, get there quicker, just like we do. So just be aware of that.
So one, kind of ending point. Two questions. Are you optimistic or pessimistic about the next 5 years?
Very optimistic. I've been in the ups and downs of this business for the last 20 years, seen the highest highs, which let's call it the last 6 months. And I've seen the lowest lows, which was, 2009. And, the thing about both of those points in time is we made a lot of money.
Yeah.
We just made it a slightly different way, but we made a lot of money in both of those, time periods. Now, there was a lot of people who got punched in the nose in the last go around because they just got a little greedy and overextended going into it. So they didn't have the opportunity to make money. But, I think there's always opportunity in real estate. It's just what it is. And you have to just be nimble enough to see the shifts coming. And that's why we talk about, are there cracks, right? Are there things happening right now? Is there some writing on the wall that we should at least pay attention to? I'm not saying Chicken Little go run and say the market's crashing, but that's one thing that you guys can start to pay attention to as you look forward. Scan Redfin every day. Are you seeing things go pending? Are you seeing things, price reduce? If so, which ones are reducing? Which ones are selling over, right? I always check the stuff that sells, and I want to see if it's sold over, if it's sold under, to get a real good litmus test on where the market is. So, just pay close attention to those things, and, the market's fluid and it'll be what it is. But overall, yeah, I'm very optimistic for the next 5 years.
Nice.
But I'm also moving, and I may go to another market. And so, I got to tell myself those things too, right?
And you might go full-time CEO, just call magic.
Yeah.
And not even build houses anymore.
That's true. So we'll see. I think I'll always build houses because that's what, Joni's going to want to do. So, but it's to what scale I don't.
We could find a spot. She could run the call center maybe in Egypt. She could fly back and forth, or
maybe,
Philippines.
or, maybe we'll open a big design center in Napa or something like that, or Naples, excuse me, but we'll see. So,
all right. Cool, man. I think that kind of encompassed both questions I was going to ask you. So I appreciate you coming back on. It's nice having you on here and there just to kind of get your feedback and your thoughts. You do a ton for me, and you really are very wise in all aspects. So appreciate your feedback.
Well, I don't know about all aspects, but
in business world, you're pretty freaking sharp. I tell people all the time, I wipe crap off your shoes to learn from you, because it's true. Watching you run the Call Magic and be the leader and the CEO is, you're sharp. So,
well, I appreciate the vote of confidence. Hopefully everybody got some information out of today. At least makes you think, right? Like, that's the whole point of today's show, is just some things to think about as we kind of head forward, because I don't think anybody knows the answers, but it's good to critically think about what's in front of us and kind of plan accordingly.
Yeah. And we both research, reading videos, reading articles. You guys got to look at this. You can't run a business blind. You got to be able to project 6, 12, 18 months out and be able to start looking at those things. So
yeah, just be a student of the game. I mean, real estate that's my one gripe, and I'll leave it at this. With most realtors, is they are not a student of real estate. They are just a salesperson for a handbag. Like, that's really it. And so that's another reason why, I've said this before on the show, but I'll say it one more time before we cut out here. It's the only business where the salesperson can know nothing about the product that they're selling.
Yeah.
Unless somebody can prove me wrong. I haven't found another one that's a high ticket item that they can literally know nothing about it other than like, okay, it's got 3 bedrooms, 2 baths, and it has a roof and it has windows, right? But I'm talking about actually know about it. So
yeah, no, they have no clue.
Yeah,
95% of them have no clue.
Yeah. So anyway, we'll leave it with that. But I appreciate you having me. Hopefully you guys got a lot out of the show, or at least something out of the show. And I'm sure I'll be back again here someday soon. So.
All right. Thanks, man.